let's face it, staying informed today, it feels like you're just constantly fighting information overload.
Oh, absolutely.
You want the crucial insights, but, without getting totally bogged down. And that's what we're trying to do here. You've brought us this really fascinating report, The Great Unlock, India in 2035. It lays out a pretty compelling vision for India's economy.
It really does. It's quite ambitious.
So yeah, let's try and cut through the noise, dive deep into this.
Absolutely. So the core idea, really, is this potential for India to significantly expand its economy. We're talking aiming for a range of maybe $6 trillion to $8 trillion by 2035.
Wow. Okay. Up from what, around $3.8 trillion now, roughly?
Yeah, that's the implied ballpark based on the growth figures. And it's not just, wishful thinking. The report actually digs into the key drivers and, importantly, the potential roadblocks on that journey.
Right. Okay, so our mission here in this deep dive is to get a really clear picture of this great unlock. What are the essential ingredients, the things that could fuel this massive growth? And crucially, what are the big hurdles we need to be aware of? So let's kick things off with that headline ambition. Hitting $6 to $8 trillion in just over a decade. What kind of growth are we actually talking about needing year on year?
Well, to get to that scale, from where India is today, the report projects a need for a sustained compound annual growth rate of somewhere between 6% and 8%.
Okay, 6 to 8%, consistently.
Consistently, yeah.
Yeah.
Over the coming decade. That's a pretty significant pace of expansion. And as the report itself notes, navigating this path, it's going to require unlocking considerable potential while, tackling some pretty well-defined challenges.
Unlocking potential. That sounds like the key phrase here. And the report, it doesn't just paint a rosy picture, right? It outlines some pretty significant headwinds that could slow things down.
Oh, definitely. It's quite balanced in that respect.
So what struck you as the most critical headwinds? What are the big ones?
Well, several factors really stand out as potential drags on this growth path. The report highlights income disparity as a major one. Then there's the significant lack of formalization across the economy, issues with market access, and relatively low productivity levels. These are flagged as key areas needing serious attention.
Okay, that's a fair list. Let's maybe dig into those a bit. Starting with income disparity, some of the numbers in the report, they really paint quite a stark picture, don't they?
They really do. I mean, there's a visual representation showing GDP per capita across different income levels, and the gap is immediately obvious. But it gets even clearer when you look at the geography.
How so?
Get this. Just 13 districts out of more than 780 in India are responsible for 50% of the entire nation's GDP.
Wow. Just 13.
13. It's a massive concentration of economic activity in, very few places. What that suggests, of course, is a huge amount of untapped potential just sitting there in all the other districts.
Absolutely. And you see that reflected in the state level figures too, right? The difference in per capita GDP between, say, Telangana and Bihar is huge. Thousands of dollars.
Exactly. We're talking like $3,800 versus maybe $650. That kind of regional imbalance, it's really stark. So it's hardly surprising, as the report mentions, that you have something like 200 million workers migrating for better opportunities.
They're just going where the jobs are, where the money is.
Precisely. They're moving to where the economic activity is concentrated. And this huge movement of people, it really highlights that uneven distribution of opportunity. And there's another layer, too. If you look at total fertility rates, they tend to be higher in the north and east, which often overlaps with the regions having fewer job prospects compared to the west and south. So you start to see how these economic disparities can create these broader demographic challenges as well.
That's a really interesting point. And then the actual income distribution itself. I mean, the statistic that the top 1% earns something like 60% of the total income.
Yeah, it's an incredibly high share.
And when you break down the actual annual incomes, what was it? Top 1% earning over 50 lakh rupees a year, while the bottom 50% are averaging like 70,000 rupees.
Yeah, the numbers are 53 lakh per annum versus 71,163 per annum. The difference is just enormous.
It's staggering. And that kind of inequality, as the report sort of implies, it must limit the overall growth potential, right? I mean, it impacts the spending power of such a huge chunk of the population.
Precisely. A massive segment has very limited discretionary spending. Plus, such a significant income gap can potentially fuel social tensions and hinder that long-term stability you need for sustained economic expansion. So it's a really crucial headwind to address.
Okay, definitely. Let's move on to the second big one you mentioned, lack of formalization. This sounds like it touches on some really fundamental aspects of how the Indian economy actually works.
It really does. I mean, the report points out something quite striking. A massive portion of India's wealth, maybe around 50% of the total asset class, is tied up in real estate.
Okay, so lots of value in land and property.
Exactly. But while real estate is valuable, it's often not very liquid. It's not as readily usable for, say, investing in a business or smoothing over consumption compared to more liquid assets like stocks or bonds.
Right, which tend to form a bigger slice of the pie in more developed economies.
Exactly. The report contrasts this with asset allocation in places like the US, UK, Japan, even China and Brazil. Their wealth isn't quite as dominated by illiquid real estate.
That makes sense. It's harder to leverage your house to invest in a startup, for instance.
Precisely. And then tied into this, you have the labor productivity figures. They're quite sobering. India's productivity is put at around $7 per hour.
$7 an hour? How does that compare?
Well, compare that to the U.S. at around $82 an hour. So India's is roughly 1/10, maybe even less.
Wow, okay. A huge gap. What's driving that low productivity?
A key factor highlighted is just the sheer size of India's informal economy. The report estimates only about 15% of the workforce is in the formal sector.
Only 15%.
Yeah, which is significantly lower than many other developing nations. Think Chile, Brazil, Mexico, Peru, Indonesia. They tend to have higher rates of formal employment.
And what does that informality mean in practice?
Well, it often translates to lower wages, fewer benefits like health insurance or pensions, less job security, and crucially, less investment in skills training and technology adoption within those informal jobs. All of that drags down overall productivity.
And this informality, it's not just workers, it's businesses too, right? You mentioned MSMEs.
Exactly. The report notes there are something like 63 million MSMEs, these micro, small, and medium enterprises, but far fewer are formalized. Only around 8 million were filing GST, for example, and maybe only 1 million contributing to employee Social Security like ESI or PF. And even among larger companies, only about 29,000 had a paid-up capital over 10 crore rupees.
So a vast number of businesses are operating somewhat outside the formal structures.
Yes. And for these smaller, often informal businesses, accessing crucial resources is a major challenge. The report specifically calls out two things: access to working capital and finding consistent demand.
Right. The working capital gap sounds huge.
It is. The estimate is an addressable demand of over $800 billion. But the current supply is less than $300 billion. That leaves a gap of over $500 billion. That's a massive constraint on their ability to operate and grow.
Okay, so these are some pretty substantial challenges: income disparity, lack of formalization, low productivity. It paints a picture of, well, significant hurdles.
Definitely serious headwinds.
But the report's title is The Great Unlock, so it doesn't just dwell on the problems. It offers a path forward, right, through these 4 great unlocks.
Exactly. It pivots to potential solutions.
So what are they? Let's start with the first one, technology. How is tech seen as a key solution here?
Technology, and specifically the combination of DPI, digital public infrastructure, and artificial intelligence, is presented as this really powerful bridge, a way to connect with and empower, potentially, the next billion Indians.
DPI and AI.
Okay.
Yeah.
The focus is heavily on making technology truly accessible. That means supporting local Indic languages, all 22 official languages, creating intuitive knowledge interfaces, maybe using contextual video and voice, not just text.
So lowering the barrier to entry for people who aren't necessarily digitally native or fluent in English.
Precisely. The goal is low-cost, population-scale AI, leveraging open-source initiatives like XStep and AI for TAAT to build these Indic language models. Think of DPI as the essential digital highways, and AI as the smart services running on those highways, reaching everyone.
That's a great analogy, digital highways. And these highways enable specific applications then. You mentioned farmers earlier.
Yes, exactly. Take UPI. It's already transformed payments. The vision is to build on that foundation. Use things like the Open Agri Network, combined with low-cost AI, to give farmers access to vital information.
Like what kind of info?
Crucial stuff: weather forecasts, soil health data, personalized advice, access to financing options, direct connections to markets to sell their produce, all potentially delivered in their own language via simple interfaces. It could really level the playing field for those 200 million farmers.
That sounds genuinely transformative. And what about education? The potential there seems huge, too.
Immense.
Yeah.
The report talks about AI-enabled, personalized, safe learning spaces for potentially 250 million students.
Personalized learning.
Yeah, imagine AI tailoring educational content to each student's individual pace, their learning style, their specific needs, creating engaging and safe environments. And it's not just theory. The report mentions initiatives already underway in Tamil Nadu and other states showing this is starting to happen.
Real-world examples already. That's good to see. And for those millions of MSMEs we discussed, how does AI help them?
Well, AI can be a powerful tool for them too, helping with things like demand discovery, finding new customers and markets, optimizing their supply chains, automating certain factory or back-office tasks, even assisting with talent discovery. The report gives examples of tech platforms already helping MSMEs manage these things more effectively.
Okay, so tech is unlock number one. What's the second great unlock?
The second one is capital. And the report seems pretty optimistic about the trends here, seeing increased availability of funding across different stages of business growth.
Right. From early stage to bigger companies.
Absolutely. It highlights the growing ecosystem of equity capital. You've got angel investors for the very early ideas, then venture capital firms, private equity, family offices stepping in, and of course the public markets for established companies.
And the amounts are growing.
Yes, the assets under management, or AUM, are increasing figures like $40 billion for VCs, $30 billion for PEs, $45 billion for family offices are mentioned. And angel investment saw a huge surge, over 7,900 deals in FY23 alone. It indicates a real growing appetite to fund Indian innovation at all levels.
And it's not just institutional money, right? The report mentioned retail investors, too.
Yes, that's a key point. Increasing participation from retail investors, often through things like SIPs, systematic investment plans. The gross annual SIP flows are growing significantly.
And this leads to a projection about IPOs.
Yeah, pretty bold prediction, actually, that India could become the most preferred IPO market globally by 2035.
Globally?
Yeah,
Wow.
based on the number and value of IPOs.
Yeah.
The report cites recent data, like from Q1, Q3 2024, showing strong activity. And there's also this interesting trend of successful Indian startups, unicorns that initially incorporated overseas, now flipping back to list in India.
That's a sign of confidence in the domestic market.
Definitely. And beyond equity, access to credit or debt capital is also seen as reaching a critical mass. Through traditional banks, especially with priority sector lending mandates,
Right.
but also significantly through NBFC's non-banking financial companies, which now manage assets worth around $600 billion. And even newer forms like venture debt are growing. Around $4 billion are mentioned.
Okay, so capital is flowing more freely. And you mentioned something called account aggregator, AA, helping with credit access. How does that fit in?
Ah, yes, account aggregator. Think of it as a digital framework, a secure and consent-based way for individuals and businesses to share their financial data instantly with potential lenders or service providers.
So instead of collecting piles of bank statements.
Exactly. With your explicit consent, the lender can securely access your verified financial history directly through the AA system. This makes credit assessments much faster, cheaper, and potentially more accurate, especially for those without a long formal credit history.
And is it catching on?
The report suggests it is. It mentions that maybe around 10% of personal loans are already enabled by AA today, and the number of financial accounts linked to the AA facility is growing rapidly. Same for the volume of data being shared securely. It's facilitating a significant volume of loans, particularly smaller ticket digital loans.
Interesting. So that streamlines credit. Then there was this idea about tokenization, unlocking capital tied up in land. That sounds ambitious.
It is ambitious,
Yeah.
but potentially a huge game changer. Remember we talked about 50% of assets being in real estate.
Yeah, illiquid assets.
Exactly.
Yeah.
So the idea here is to make that land wealth more usable. The report proposes creating a unified ledger, basically a secure, central digital record of land ownership.
Like a digital land registry.
Sort of, but potentially more sophisticated, combined with a robust system for verifiable credentials, proving ownership digitally, and an orchestration layer to manage transactions and access.
Okay. What does that achieve?
The goal is to make land titles much more transparent, easily verifiable, and crucially, easier to use as collateral for loans, or perhaps even tradable in fractionalized forms in the future. It could potentially unlock trillions. The report suggests $3.3 trillion in currently tied up land capital.
Trillions. Wow. Are there steps towards this already?
Well, the report mentions the existing Bhu Aadhaar link, which connects land records with the Aadhaar identity system as a foundational step. This already simplifies things, like making it easier for landowners to access government schemes by digitally verifying their land ownership. Tokenization would be the next big leap.
Okay, so tech, capital. What's
Yeah.
the third unlock?
Unlock number 3 is entrepreneurship. And India's startup scene is already pretty vibrant, we know that, but the report suggests taking it to a whole new level.
How so? What's the target?
The ambition is huge, aiming for 1 million startups by 2035.
1 million. From what now?
From around 150,000 today. So that implies a really rapid growth rate, something like 20% CAGR. We already have around 100 unicorns, maybe 2,000 significantly funded startups, but this is scaling that up dramatically.
And is this still concentrated in the big cities?
That's another key point, no. The report highlights that this growth is spreading out. About half of the new startups are now based outside the traditional top 8 metro areas.
That's really encouraging. Entrepreneurship taking root across the country.
Exactly. And the report gives concrete examples. Companies specifically targeting smaller towns and cities, like a D-Mart for India's smaller cities, or Zomato's hyper-pure service, supplying even street hawkers in places like Raipur and Lucknow. It shows entrepreneurs are really understanding and catering to these diverse markets now.
And they're innovating in their business models, too.
Absolutely. Rethinking products, delivery, payment methods. The examples range from fintechs enabling autopay on UPI, digital savings platforms, e-commerce reaching hundreds of millions, logistics networks. The vision is that this wave, combined with the other unlocks, could help maybe 10 million MSMEs transform into more modern, digitally enabled entrepreneurs.
So entrepreneurship connects back to formalization and capital access and tech adoption.
Precisely. It's deeply intertwined with accessing that equity and debt capital we talked about, leveraging technology and AI for productivity, and bringing more businesses and jobs into the formal fold.
Which brings us neatly to the final unlock, formalization itself. This seems like the linchpin holding many of the other pieces together.
It really does feel central. And there are a few key drivers mentioned here. First, demographics. India has this huge young population, 380 million Gen Zers entering the workforce, who are largely digitally native.
Right, and women's workforce participation.
That's seen as a massive potential boost. The report projects it could rise from around 25% today to potentially 47% by 2035. Doubling the female participation rate would be huge, and link that to tech remittances. The report projects that maybe half of India's entire workforce will be AI native by 2035, comfortable using AI tools in their jobs.
Half the workforce AI native. That's a big statement. And digitization is helping bridge those geographical gaps we talked about earlier.
Yes, significantly. The report shows data on how a large chunk of digital loans are now dispersed outside the major metros. Similarly, for services like ride-sharing, a lot of activity is happening in non-metro cities, showing digital platforms are reducing that spatial inequality.
And it's changing how people work.
Definitely. Technology and digitization are fundamentally reimagining work, creating more choices, more flexibility, different ways to earn. This applies across the board: formal salaried employees, gig workers, micro-entrepreneurs running small businesses.
Any examples of how that works?
Yeah, the report gives several, like companies enabling workers to access part of their salary instantly via UPI if needed, or platforms where referral bonuses for bringing in new workers also lead to those new workers getting formal PF accounts set up, or financing schemes helping gig drivers become owner-operators of their vehicles. These are all small ways technology can nudge people towards more formal financial and employment structures.
Interesting. Little nudges towards formalization.
Exactly. And it's not just typical jobs. The report even mentions things like the developing digital energy grid, potentially creating energy micro-entrepreneurs, people participating formally in decentralized energy generation or trading.
But there's a catch, right? Formalization isn't easy.
No, and the report is very clear on this. A critical bottleneck is the sheer complexity of India's laws and regulations. The massive number of compliances, filings, approvals needed at both central and state levels. It's a huge burden, especially for smaller businesses. Drastically simplifying this regulatory landscape is presented as absolutely essential to accelerate formalization.
Unshackling entrepreneurs, basically.
That's a good way to put it. And alongside deregulation, there's this idea of portable work credentials and portable work benefits.
Okay, what does that mean? Portable benefits.
Think of it as a system where your verified work history, your skills credentials, maybe even your Social Security contributions or health benefits aren't tied to one specific employer. They travel with you as you move between jobs or between gig work and formal employment.
Ah, okay, so that would provide more security, especially for gig workers or people changing jobs frequently.
Exactly. It could provide a crucial safety net and make formal participation more attractive and seamless for a much larger portion of the workforce. It's seen as key for achieving population-scale formalization.
Right. Okay, so we've covered the headwinds and these four big unlocks: tech, capital, entrepreneurship, and formalization. If we were to sort of boil it all down, what are the absolute key recommendations the report makes to actually get India towards that $8 trillion economy?
Well, it synthesizes them into a few core action points. First, absolutely accelerate capital flow equity, debt at all stages.
Mhm.
Keep that pipeline growing.
Okay, capital first.
Second, really focus that AI, push AI for 1 billion Indians, especially targeting last-mile consumers and those MSMEs. Think agriculture, health, education as priority areas for AI impact.
Right. Make AI practical and widely accessible.
Third, maximize the penetration and usage of account aggregator to streamline credit access. Make it ubiquitous.
Get AA everywhere. Got it.
Fourth, drive that land monetization vision via tokenization. Start unlocking that trapped real estate value.
Unlock the land. Ambitious, but okay.
And finally, underpinning everything, turbocharge formalization. This means unshackling entrepreneurs and MSMEs through deregulation, actively funding startups outside the metros, implementing those portable credentials and benefits, ensuring MSMEs get better access to credit and markets. It's a broad push on multiple fronts to simplify rules and bring more activity into the formal sphere.
It really sounds like a multifaceted strategy, no single silver bullet.
Definitely not. It requires progress across all these areas simultaneously.
It's a truly ambitious vision, no doubt about it. And like we said at the start, navigating this uncharted path, as the report calls it, it's going to be complex. There will be challenges.
Right.
So thinking about these massive potential shifts we've discussed, the tech adoption, the entrepreneurial energy, the capital flows, this drive for formalization,
Yeah.
it makes you wonder, what single factor, if you had to pick one, might be the most crucial pivot point in actually unlocking that $8 trillion future for India? And perhaps more interestingly, what unforeseen challenges, things not even fully mapped out in the report, might pop up along the way?
That's a great question to ponder. Which unlock carries the most weight? And what haven't we thought of yet?
Exactly. Definitely something for our listeners to mull over as well. A lot to consider as we look ahead towards 2035.